I call it the Spotify moment of capital markets because we see now the dematerialization becoming a reality. And what I mean by that is we still have paper form of securities that are being safe kept in a safe with central securities depositories. So there is a centralized component to that, as opposed to just, creating securities, for example, that solely and purely exist on blockchain. And that is transformational. It's kind of like, for me, I love to compare that to what happened in the music industry with CDs in their materialized form going on to MP3s, MP4s, and so on.
Hello and welcome to Let's Talk About Tech, your podcast on entrepreneurship and venture capital, brought to you by Venionaire Capital. I'm very proud to introduce you today to Max Heinzle, CEO and founder of 21X. Welcome, Max.
Thank you, Berthold. It's great to be here.
Great to have you. You had your failures, your successes as a serial entrepreneur. You started a lot of things. Tell us a little bit about your story.
Well, yeah, maybe to start off, I studied economics. Started working in investment banking between my undergrad and postgrad degree. I did my postgrad in banking and finance. And then actually moved to Vienna when I really kicked off working in venture capital at the time. Was a very exciting time, having the chance to actually learn more about, getting startups off the ground, growth. And also enjoyed setting up a new fund in the space of mezzanine finance. So moving basically from equity to the mezzanine funding side before I switched to corporate finance. So I, to be honest, got bored pretty quickly. Wanted to experience a new side of finance, and in this field of corporate advisory and corporate finance services, had the pleasure to start, advising companies on corporate bond issuances and listings, predominantly on the German stock exchange, where we would normally fund somewhere between 20 to 250 million euros. And that's when my former boss said to me, "Hey, Max, there is a pioneer for crowd investing. How about you go and see him?" At the time, was a completely new field for me, was the first touch point I really had with fintech, which was pretty much exactly like 11 years ago. And at that time, I was just fascinated by the new possibilities that, the web was presenting also to the, say, fundraising methodologies that, you can offer to companies as an alternative form of funding. And I pretty quickly made up my mind. I really got along well with the founder at that time. And he asked me if I would, be interested to kind of support the company also with my know-how on the capital market side. Kind of, I would say, driving the evolution of crowd investing at the time, because at that time, crowd investing was predominantly like based on subordinated loans, and say maybe risk-return ratios weren't exactly where they were kind of where you would expect for them to be. And that really got me motivated. And I think that's also what initially, or eventually then also led me to starting my own company. So I pretty soon made up my mind when I came across blockchain for the first time. And particularly when I saw that Mercedes-Benz and LBBW in Germany had done like a pilot project in the context of issuing a corporate bond. That motivated me at the time to really try and innovate in the space in the capital markets industry, and that's also what then eventually led me to founding 21 Finance back in the day out of Liechtenstein, and then later 21X. That was in March 2017 that we started, was my second startup. At the time, first startup I founded when I was 19, together with a lot more senior colleague of mine, where we founded the Institute for Value-Based Enterprise in Switzerland back in the time. Yeah. So today, founder and CEO, right? We have 21X as a 100% subsidiary of ours. based out of Frankfurt. We are with 21X since the 3rd of December, the first so-called DLT-TSS licensed company, and and innovating in capital markets. Yeah.
Very nice. Looking backwards to your experience, what is the biggest learning that you take for your new company with you?
Well, I think Berthold, I think what really got me motivated um, was to see, all these inefficiencies in banking and finance in general, and also some, I would say, not very democratic, um, say, characteristics of capital markets that kind of really got me extremely motivated to try and change something about that. And actually at the time being, when I worked with the before mentioned pioneer for crowd investing in Germany, I I just saw that there's a lot of potential for improvement, and that banks and the collaboration with banks was actually not really digital. Yeah, there were file exchanges rather than APIs. Banks were also at the time not really they weren't set up to work with fintechs. I mean, it was the time when Solaris and other banks, were coming and setting up, their entities and getting really started. But so for me, it was really the fact that I learned about all these inefficiencies and about limitations in capital markets, and that then eventually drove me to say, okay, let's try and change something about that. Let's take an entirely new approach to it. In the end, I guess I thought it would be a lot easier than it turned out to be, and I thought it would also work out much faster, right? I guess that's also quite common, right? You come to understand that things take longer and that they're more expensive and more complicated than what you initially thought.
Usually, Europe is not known to be the front runner in something, right?
Yeah.
Especially in innovation. Yet in blockchain and particularly in capital markets related to digital assets, Europe is actually leading the world with MiCA regulation and some other regulations around that. How do you perceive the environment here in Europe in comparison to the rest of the world? I know you just came back from California. You're always looking left and right? What's happening in the world? So what is the competitive edge here in Europe, also from a regulatory standpoint and also with the adoption of crypto in financial markets?
Yeah, I think that it's actually fascinating to witness what has happened over the last couple of years. It was actually when I mentioned earlier, I got started in Liechtenstein actually because Liechtenstein was one of the first countries globally to implement regulation that was actually focusing on blockchain technology, allowing for blockchain technology to really be leveraged. That's what I say. I always like to say, blockchain leveraging regulation is, for me, the foundation also of why we now see the adoption happening also in the institutional space. And the competitive advantages, first and foremost, I think Europe is known to be say fast in regulating, and the question is then always, are we ending on what side of the spectrum are we ending? Are we over regulating? I think that we had a great start in Europe, right? And I think that there's a lot more work that needs to be done. And I think the competitive advantage is that where other countries were still, hesitant and discussing whether crypto is actually here to stay, or whether tokenization in capital markets is actually something that needs new legal frameworks, right? Again, in order to leverage blockchain technology, I think that is where Europe also, besides the EU, also Switzerland. I mean, we must really give the credits also to Switzerland. Following Liechtenstein, they were one of the first adopters of regulation. EU adopted, then now we see UK adopting. And like you said earlier, I do enjoy traveling the world, and it's a great privilege that I actually get to also see where regulation is now up and coming, or where we already have regulation in place now for say a few years. So talking about regions like the UAE, for example, Abu Dhabi, Dubai, talking about what's going on in Singapore and in Hong Kong. Besides also, other Asian countries now, stepping up. And then in particular now with the new president-elect, Donald Trump in the US, right? Where we have, I would say, a 180-degree turn when it comes to, the sentiment and the views regarding crypto stablecoins. So I think that one thing that I do want to stress is, and I briefly mentioned it earlier, we really need to make sure this is just the beginning, right? We have laid a great foundation. It's actually the case that myself and also the team, we invest a lot of effort into trying to also, support policymakers in actually, making the right steps now following the first, say foundation, the regulatory foundation that they've created. And that's also something that we will continue doing, right? We are now, for example, going to Washington to talk to the regulators there about, how it was actually possible for us as the first company to obtain, say, a very innovative new way of financial market infrastructure license. Yeah. And that's I think that's part of our mission as we are pioneers and as we are leading, say, in the field, that we also try and, do what we can in order to really see our vision come true of harmonized capital markets where we can really also, provide for services cross-border.
You said digital markets infrastructure, right? And you explained this DLT-TSS license that you have.
Yeah.
So for those that are not so deep into regulation out there, right?
Yeah.
Is this an exchange? Is it a brokerage? Is it a custodian service? What is 21X, right? And what is the benefit for the user out there? How can they use your platform? How could issuers approach you, right, and use this platform to trade?
Yeah. So maybe let's put it this way, because financial market infrastructure is something that is rather abstract. And I think the easiest way to explain it is that you say, okay, unlike capital markets today, where you have both an exchange, a settlement system that is separated from each other. They call it also central securities depository. Then we have clearing houses, we have a brokerage, we have banks, we have transfer agents, and so on and so forth. There's a lot of different types of special purpose licenses that you need to obtain in order to provide specialized services. And what's, say, groundbreaking, and where I think that, really this is a moment in the history of capital markets, that
you called it a Spotify moment, right?
Yeah, I call it the Spotify moment of capital markets, right? Because we see now the dematerialization becoming a reality. And what I mean by that is we still have paper form of securities that are actually being safe kept in, that are being safe kept in a safe, or with central securities depositories. So there is a centralized component to that, as opposed to just, creating securities, for example, that solely and purely exist on blockchain, right? And that is transformational. It's kind of like, for me, I love to compare that to what happened in the music industry with CDs in their materialized form going on to MP3s, MP4s, and so on, right? And also the fact that, we have intermediaries in between us, as individuals, you and me, where we would normally, trade, say, shares or bonds or other types of, financial instruments on stock exchanges like Deutsche Börse, Vienna Börse, right? But also other large stock exchanges like NYSE or NASDAQ, right? And we never get a chance to directly connect to those venues. So always between us as individuals and the actual, exchange, there is a bank that is providing services such as being connected to the trading systems of those exchanges in order to route our orders to those venues. And the same kind of goes also for the custody services. So we cannot take self-custody of, say, securities such as Apple or Tesla or Nvidia, right? Those are public markets, and we need a depository bank to provide, custodial services. So getting back to the question on what is actually the DLT-TSS license, it is both an exchange, it's a settlement system. We are also actually a broker. And then we have various exemptions from regulation in the EU that allow us to do what I mentioned earlier about the digitization and registering securities directly on blockchain.
Is this a sandbox scheme?
Yes, it is. It's actually called the EU DLT pilot regime in the EU. It's a program that has been implemented with, the idea being to, really give companies, whether it's fintechs or also financial institutions, the opportunity to receive several exemptions from current, market infrastructure regulation and really to drive innovation, as before mentioned, to really think of processes in an entirely new way. And by means of making use of smart contract, we are automating a lot of, processes, and we are actually enabling, also efficiency gains that were never realizable before in the past, right? Maybe to give one example is when an order, is routed to our market, whether it's a buy or sell order, it is matched in our central limit order book. And once it is matched, it's actually atomically settled. So it takes no intermediary anymore to ensure that both the cash and the asset is actually available with the actual traders. And that actually is also risk mitigating. So there was in the past, there was settlement risk, right? And today we don't have that risk anymore. And I think that is a very good example, right? In the context of, how game changing this new regulation is. Maybe another example, right? We see in public markets in Europe for, the settlement to take place and for the actual security to end up being in your deposit with the bank, that it's normal that it would take about 2 days, right? In the US, it's a bit faster. They have now moved from T+2, they call it, to T+1, right? But in our case, it takes 2 seconds, right? So this is also something where, again, besides the points that I mentioned earlier, where we just see that there's a fundamental shift, and this is we believe game changing for capital markets and the financial industry.
So you're starting this now, and it's I would assume open, right, for issuers of shares, funds, right?
Oh, right.
That want to list, right?
Yeah.
How do you get liquidity into the system? Because every infrastructure is only as good as the liquidity, right?
Yes. And maybe also to just cover on the question that you asked earlier, because I kind of got carried away there, I guess.
It's okay.
Right on the novelty of this license and the setup. So both we predominantly, even though there's a bit more to it, we have buy and sell side. And what we are doing is we are focused on enabling users and also the likes of the listeners out there, right, to actually get access to this new type of security, tokenized securities, through the likes of the venues that you already know today. So we are not, even though we can, work with individuals directly, this is not our focus. We are focusing on enabling the likes of banks, brokers, exchanges, whether they are neo or traditional, to expand their product and service offering, if you so want, to also offer those new products to their clients. That's kind of our strategy also to hyperscale. And that way we don't go into competition with the likes of these players that are already, providing services in the field. And then on the issuer side, we are working either with issuers today still directly, but in the future it will shift more towards the likes of listing sponsors that we work with that enable listings, that know the criterias that need to be met in order to, also get a product admitted to our trading and to our trading venue.
No, I certainly hope that Venionaire is soon a listing sponsor on 21X. Sounds like a fantastic program.
Yeah, and hopefully also some of your funds could be listed with us, Berthold. That would be amazing, and we should definitely talk about that. But with that being said, getting to your latter question, and that is, addressing the topic of liquidity, because honestly speaking, that is the most difficult thing. Yeah, it's actually addressing the problem of the chicken and the egg. And getting back to my point from earlier, if you have sell and buy side, right, then the question is, what came first, the chicken or the egg, right? And the reality is, if we start a new store, right, we need to put products on the shelf. So that's how we start, right? We went operational it's almost 2 weeks ago, launching our primary market, where we saw the first, money market note being listed and now available to, be purchased with the likes of stablecoins, which is really a novelty. Yeah,
it was a money market fund from UBS, if I'm not mistaken.
Yeah, it's actually in collaboration with Black Manta and SBI that we brought a, say, money market node, which is feeding into a money market fund, which is being or which was launched by UBS. Now we'll see. This is a classic form of a digital twin. It is already an existing product, a traditional product, and we create a tokenized form of it, right? And we bring it to a new audience and into a new market. But what we will be seeing a lot more in the near future is that we will be seeing natively tokenized financial instruments, getting back to what I said earlier, right? Where actually the DNA of the financial instrument is much more digital than what we have today, right? So I call that the next generation of security tokens. But getting back to your question on liquidity, I mean, filling the shelves with products is the first step. In order to attract the likes of investors, you need to prove that the fruits are kind of lower hanging, that there are benefits. Why would you move from a functioning system to a new system, right? Because there is an integration effort for banks, for brokers. Right. There's also new, challenges that come alongside this new technological setup on chain, right? For the likes of market makers, liquidity providers, for example. And this is, I would say, going very well for us at the moment. Maybe we have very convincing arguments to say that we are, now in the process of moving in our go-to-market strategy from, say, a rather orchestrated launch with a few issuers and a few, trade participants, to actually scaling. And for that, we are working on onboarding and integrating some major banks and also crypto exchanges and brokers. So people will be able to get access through those venues in the near future. And the idea is obviously with every participant that we are adding to the venue, that we deepen liquidity. Yeah.
And also market makers, I would assume, right? Professionally, to balance the books.
Absolutely.
Right? Okay. If you look a little bit into the future, right, with the launch of 21X, all the evolvements around MiCA regulation, further adoption of blockchain, Trump changing the landscape in the United States, Qatar now also starting to implement and test, right, with blockchain, UAE leading the pack in the MENA region, and many, many other regions, as you said. Where's the world heading? How do you see it?
Yeah, I mean, I think we're entering actually already the inflection stage of this industry. And I say that when I say already, I should, maybe put it into relation because, or into context. I mean, I've been working now in the field for almost 10 years. And there's been a lot of promises and claims that have been made over the last years. I think that, we've seen a lot of securities being tokenized and issued and distributed, but we haven't really seen any secondary market venues like actual exchanges that allow for, trading and settlement in a blockchain leveraging way. And I think that now has changed. And I do understand that some will say, okay, of course, you're going to solve all that. I think it's not just us, it's going to be others as well. It's just that we are leading the way in that sense. But that is a critical piece to the puzzle that is missing so far. And I'm 100% convinced that it is one of the major reasons why the industry has not, accelerated yet to an extent where maybe many had expected. Let's also be, for the sake of, thought leaders of the industry, the major players, the largest asset managers in the world, the largest, financial service providers, the largest custodians, all of them, are working on integrating, technical solutions for custody, for tokenization. You just need to listen to what Larry Fink and the guys are saying, CEO of BlackRock, Janet Johnson from Franklin Templeton,
Jamie Dimon.
They're like the sentiment also there has completely shifted. The reality is all of those large asset managers already have, launched tokenized financial instruments. The likes of the banks that are, the largest custodians in the world already have implemented, custody solutions. So I think that a lot of that is happening. I mean, there's also a lot of press releases that we, get to read, and we see some of the developments also publicly, but a lot of that is happening behind the scenes. And I think it's fair to say that those domino stones have fallen. So we're already in some form of transition. Yeah. And I think that what's going to happen is that that's going to accelerate significantly for the reasons I before mentioned. Yeah. It's regulatory adoption. Yeah. And it's the likes of, blockchain leveraging market infrastructure regulation that will actually deliver on those claims and promises, make it realizable, that will bring institutionals also into the space, which is clearly a necessity, for liquidity. And I think we're looking at a very bright future where we are going to enable a lot more. So the financial inclusion also of emerging markets, where we will enable and realize democratization also in capital markets, and where in the end we get rid of inefficiencies and intermediaries where we don't need them anymore. And I look forward to that future, which is now becoming a reality, where we invest at the tip of our finger, real time. And the moment we are invested, we are already generating, returns, as opposed to having to wait, kind of like with mail and email, right? It's kind of the same.
It's great to see blockchain unfold in Europe. Regulation is in place, the markets are ready, the infrastructure is placed. It was great to have you, Max. I hope you enjoyed this episode, and I hope you subscribe to our channel. Tune in for the next episode.